I'm James Turk. I'm a director of the GoldMoney Foundation. And it's my pleasure to be here today with Francis Schutte, founder of Goldonomics.be. He's the sponsor of the conference that I'm going to be speaking at tomorrow. He'll be speaking as well, called The Phantom of Hyperinflation. I'm going to be talking about inflation, hyperinflation, the conference, and also a book by Huerta de Soto, Professor Huerta de Soto, who will also be speaking at the conference. The GoldMoney Foundation has just translated this book into Dutch, which I think is the 8th language of this fantastic book of Professor Huerta de Soto. Francis, it's a pleasure to be here with you this evening in Casterly, Belgium. I'd like to talk a little bit about the conference and the reasons why your organization is sponsoring this conference tomorrow, and how you came to the title, The Phantom of Hyperinflation.
Yeah, well, the conference basically, we decided to take advantage of the fact that Huerta de Soto made a Flemish translation, Dutch translation of the book, and we could as well introduce a different kind of economics to the Belgian public, because so far everybody has been raised with Keynes, and by now most of the people should know that there's a big fallacy in what he's trying to tell people. And altogether, we said, it was an excellent opportunity to introduce De Soto and what he's been translating in Flemish to the Dutch and Belgian public.
Yeah. Is there a growing awareness and concern about inflation here in Belgium?
I think that's a very hard question to answer. It's probably a growing concern for a certain group of people which feel the squeeze of the rising food prices. However, people which have a larger income are not confronted directly with it, and they still don't believe that something worse is going to happen in the near future.
Is there still confidence in the euro, or are people worried about the outlook for the euro?
Well, that's a big joke. In the United States, everybody thinks that the American dollar will collapse tomorrow. And in Europe, everybody thinks the euro is going to collapse tomorrow. So it's like a run for the first one to get towards zero.
It's a race to the bottom.
It's a race. It's going to be a race to the bottom for sure.
Yeah. So people are taking steps to diversify away from the euro, or are people still sort of trying to understand how to best protect themselves if they see inflation coming?
I think there's a lot of people, especially I would say in Belgium, and they think that by investing in real estate, that will solve the problems.
Well, it is a tangible asset, so there is some advantage to that. When you say real estate, do you mean buildings or do you mean farmland?
Whatever is available in Belgium.
Is there much speculation?
I don't think there's a lot of speculation. I'm not sure about it, but what I know for sure is that the prices are very high.
Yeah.
And if you compare it to the United States and even to Spain, I mean, this is like, it's crazy prices, to be honest.
Well, it's interesting you mention this, because in Huerta de Soto's book, which talks about fractional reserve banking, he explores the Austrian School of Economics, what's called the Austrian trade cycle, or what I call the boom and bust cycle. And one thing that's clear is that when you're in a bust, you want to own tangible assets of all sorts so that you don't have counterparty risk and someone's responsibility for debts owed to you. Obviously, real estate is a tangible asset, but it's an illiquid tangible asset.
However, real estate is a high-order capital good, and it's a highly leveraged asset, and it's going to be negatively affected by raising interest rate.
Yeah.
So it's not really the place to be when we have a hyperinflation depression.
Well, let's talk about this. Are you convinced that we're on the road to hyperinflation?
I think we'll see a hyperinflation depression in the United States. The problem is, what will happen first. Whether the euro will fall apart or whether we're going to have hyperinflation in the United States. Mm-hmm. If the euro falls apart, we could see some hyperinflation in different countries, for instance in Greece or in Spain, with the devaluation of the new currency. Let's say that the Greek people revert to the drachma and the Spanish people revert to the peseta. At that point, yes.
Mm-hmm.
But that's a question mark. It's very hard to tell, what's going to be first. If it's going to break first in the United States, or if it's going to break first in Europe.
Well, you spend a lot of time on both sides of the Atlantic. What is your best guess?
To be honest, I don't know. It's probably going to be, it's a rotten door. And who is going to open the rotten door first, whether it's going to be in the United States or in Europe, I haven't got a clue. I don't think it's very important anyhow. If you make your precautions well in advance, whatever happens, you're going to be on the safe side.
Yeah. The one country that I've actually been watching very carefully is the UK. I always thought that the US would be the first to go to hyperinflation, but the situation in the UK, in many respects, is worse than it is in the United States. So the surprise might be that it could be the UK that goes first, not the euro or not the dollar.
I agree with you. The UK is the canary in the mine shaft. However, what about Japan? What if it happens in Japan first?
Well, that's a good question. I mean, Japan, in many respects, just looking at the numbers, is by far the worst. The debt to GDP, the aging population, the deficits that they're incurring, and like we have in the U.S. and much of Europe, misguided policies. They're trying to revive the economy by more debt, and you don't solve the debt problem with more debt. You just create a bigger problem for yourself down the road. So maybe it might be Japan that actually.
So we don't know where it will come from. Yeah. And normally, and usually, it comes from the corner where nobody expects it will come from.
Yeah. That's
the trick.
Yeah, that's absolutely right. You can never guess what would be the trigger that will cause the problem, and it could be almost anything. I mean, it could be real estate in Spain, Spanish banks, for example, and the problems that they're dealing with presently. It could be completely something we can't even think of at the moment.
I think that, as you mentioned, Spain and the Spanish real estate problem, as long as the governments and the banking systems are prepared, and they know that something is deadly wrong in Spain, central bank knows it, and as long as they're prepared, it won't happen. Danger will not come out of that corner. It will probably come out of a corner that nobody expects it will come from. And that is something which I don't know. I mean, in Europe, they're probably pretty well prepared. They're pretty well prepared in the United States, and that's possibly, I don't know, maybe Japan.
Yeah.
Maybe the UK. I haven't got a clue. I mean, that's the million-dollar question.
Yeah, understood exactly. Let's turn a little bit here to gold. How did you first get involved with gold? Is it educational background or business background, or?
Well, I mean, I started to look at gold in the 1970s and the 1980s when we had the first run for gold, when it went up all the way to $840 per ounce. And at that time, Volcker was in charge, and he basically what he did, he was able to manage the whole problem. And he kicked everything back, he raised interest rates, and he avoided the hyperinflationary depression. Today, it has come back with a revenge. And as interest rates today cannot be raised anymore, Mr. Volcker has no more arrows. And that's the problem we have today, and that's the risk, and that's why I'm almost convinced that, sooner or later, and it's probably going to be before the end of 2012, that we're going to run into some kind of serious problem.
It's interesting that you point out that Mr. Volcker was raising interest rates and Mr. Bernanke has been lowering interest rates. It seems like that disconnect is not going to end up with a happy solution. The dollar was survived and continued to be accepted as currency because Mr. Volcker cut back on inflation.
Correct.
But Mr. Bernanke, with these low interest rates, I think are lessening the demand for the dollar because people can't earn enough interest to offset the risks of holding dollars, and that actually probably is going to signal problems for the dollar and maybe even the U.S. economy ahead. You seem to agree with that.
Yeah, absolutely. I mean, there's no way you can raise interest rate either in the United States or in Europe. You forget about it. The first guy who raises interest rate, he's just going to, it's suicidal.
Yeah.
It's the end of the economy.
it's also sort of an arithmetic problem or mathematical problem in the sense that the U.S. government now has $14 trillion of direct debt. You raise interest rates 1%, that's $140 billion. That's about, additional 5% additional budget deficit, or excuse me, 5% of the revenue of the government, about 10% additional budget deficit. So it becomes mathematic in that you're in a vicious circle, much like it was in Weimar Germany in the 1920s, where they just continued issuing more debt and more currency and more debt and more currency, and ultimately led to a flight from the currency and ultimately the hyperinflation.
Yeah, and I think that the problem or the risk of the guys who could, pull the plug out of is China, because the United States, they have been living by the means of China.
Mm. China, it's interesting because they've, according to the latest statistics, stopped increasing the amount of U.S. government paper that they're holding. They've also given a couple of other signs, periodically they announced that they've been accumulating gold. I think this last announcement 2 years ago was like the third announcement they've made in over a 10-year period of time. I travel to South Africa quite a bit, and every time I'm down there, there are legions of Chinese officials throughout southern Africa, gobbling up resources, spending dollars, getting into tangible assets, getting out of financial assets. So that's the winning strategy that I think individuals should be following as well.
Oh, yeah, there's no doubt about that.
Yeah.
I mean, unfortunately, I don't think that China can get involved into the gold market and silver market overnight, because if they would, that market would just go bizarre. We'll go to the moon.
I have this view that China's going to continue, playing more or less by the rules as the rules were established by the U.S. until the system collapses, and then they're just going to go their own way with their own wealth.
They're going to live around. They're going to follow the rules, and they're going to try to accumulate as much assets as they can.
Building a financial empire globally?
Oh, yeah. Yeah, they're not going to. I mean, it would be stupid for them to collapse the whole system.
Yeah.
And they can. If they pull out the plug, the system is going to collapse. So they're not going to do it.
So they'll let it collapse, and then they'll...
It's probably, that's why I say that it's probably going to happen somewhere where nobody expects it. Like, for instance, I mean, I'm just calling Japan, but it could as well be somewhere else. Mm-hmm. It's very hard to, I think even if people have a crystal ball, you would not be able to tell it.
Yeah. What do you make of the inflation problems in China itself in terms of, rising prices and what that's impacting gold and silver, the demand for gold and silver being imported now into China?
Well, I think, like gold and silver in China is basically, it's part of the culture.
Yeah.
So whether or not you have inflation won't change the Chinese pattern, and they will continue to buy gold.
Yeah.
The only thing which one should be aware of, and I think that's also something which is very interesting and it should be mentioned, is that China is a high capital order country. Mm-hmm. So that means that China is manufacturing the products which are consumed by the West. And the day that the West is going to collapse, I mean, China is going to be a lot worse. So the solution is not to invest in Chinese stocks and in the Chinese yuan and in the Chinese bonds, because, something will happen there as well.
Yeah. Well, how best do people protect themselves given what you see unfolding in the months and years ahead?
And there's very little you can do. What we advocate is that you have to make sure you have gold and you have silver and you have gold and silver mines. You also get invested into the energy sector and everything which is, apart from energy, which is low order consumer goods.
Yeah.
And they're going to be favorably advantaged by the depression.
Are these some of the points that are going to be covered in the conference tomorrow?
Oh, yeah, sure.
Yeah.
Absolutely.
What will be the main conclusion of the conference? How people will protect themselves in the coming inflationary or hyperinflationary environment?
I mean, one is how you can protect yourself, and number two is how to make sure that whatever you do is out of reach of government. Because, whatever you do in the EU or the United States, if you do it and it's within reach of the government, as all certificates are going to be digitalized by 2012, I mean, government can take it away tomorrow, and they probably will do.
So you recommend global diversification of your assets?
Well, there's not a lot of global diversification possible. I mean, you have to put your eggs in a couple of baskets and watch them closely. And make sure government can't make an omelet out of it.
Okay, well maybe that's going to be a topic for another interview at a later date.
Well,
Francis, it's a real pleasure to have spoken with you, and I look forward to participating in the conference tomorrow.
All right, pleasure was mine.
Thank you very much.